Hello everybody and welcome back to the channel. My name is Smart Money Mo, and in today's video I'm going to be talking about the easiest golden confirmation that you can be using on the lower time frame to improve your trading. If you are currently struggling with lower time frame confirmations, make sure you watch the whole video and stick right up until the end, as this is the video that's going to break it down for you. We're going to be explaining this concept with a beautiful trade that I sent on Euro USD to the team. As you guys can see, I sent out this chart with the POIs to my team, and I explained on the weekly call what I would be doing at every single one of these zones. And yeah, price eventually tapped into this POI and gave us a beautiful confirmation trade of which ran for over 15 RRs. Now, I sent the POI, and confirmation trades are taught in my course already, so everyone who was in my course theoretically could have profited from this trade. If you guys would like to enroll in my course and my mentorship to get all of the benefits, the trade ideas, the full course, the new ALQ strategy, which has a proven 3RR average and a 50% win rate, which would make you extremely profitable, weekly Zoom calls, and all of the other stuff, which is listed over here, make sure to check the first link in the description and pay a one-time fee for all of these benefits. But without further ado, let's get right into today's video. Okay everyone, I'm going to be explaining a 5-step process for the easiest golden confirmation, a confirmation which is going to improve your win rate when trying to take trades on the lower time frame, and I'm going to be explaining this process with 5 key steps. Now, the first step is the simple step of waiting for price to tap into your higher time frame zone. This is a very simple thing. All you need to do is wait for price to actually just tap into the zone and start to give you some sort of reaction. Now, once price has actually tapped in and has started to move after going into your higher time frame zone, the first thing you need to do is identify the supply or demand zone which needs to be failed. Because the whole concept of this sort of flip zone slash supply to demand zone and this sort of thing is that what we're doing is we're waiting for price to violate in one direction. So let's just say we have a demand zone here. We're waiting for price to actually violate this demand zone and go past it, go through it, so that we can trade the opposite way, which would be a supply zone. That is the theory behind what is going on here. The golden part is through the steps to make sure that you understand what you're doing, right? Because in theory, all it is if the buyers are losing, then we're going to join the sellers, and if the sellers are losing, then we're going to join the buyers. That's all it is. We're just waiting for the flip. If the demand fails, then we're going to flip to supply, and if the supply fails, then we'll flip to the demand. So let's explain it in the sense where, let's say the demand is going to be failed. So let's say overall we tapped into this red box. This red box is a higher time frame POI. Let's say on the 1 hour time frame, it's a higher time frame POI. It's a supply zone on the 1 hour time frame. Now we can see with this, tap into over here, we can see price has tapped into this zone. So what are we looking at right now? In this scenario, because we are trying to trade a supply zone, we need to wait for a demand zone to fail. So as we can see here, there is a clear demand zone over here, which was created importantly before price tapped into the zone. So make sure the demand zone that we have is was created before price tapped into the zone, and you can see this demand zone was created over here. So identify this demand zone, identify it here. And what I'm going to be waiting for is for this demand zone to be failed. So I identified the demand zone and price has tapped in. And now all I have to do is wait for price to begin to drop, and hopefully we will drop below this demand zone. Because if we drop below this demand zone, it tells us that the buyers are no longer in control of this market, and smart money no longer has the intention of pushing price towards the upside. So therefore we're going to be looking for the flip, which is this supply zone. So we wait for price to fail it. As we can see through this drop, price has now failed this demand zone. And now we mark up the zone which caused the flip. The zone which caused the flip just means the lower time frame supply zone on the flip side. So if this demand zone was failed, that means a supply zone must have caused this down move, which caused the failure of this demand zone. So this supply zone over here, all the way up here, is the supply zone that we will be trading from, and is our FZ, which just stands for flip zone. Bang. That is exactly the concept that I am explaining here. It's a simple 5-step process. All you need to remember is identify the demand zone before, which has been created before price tapped into the higher time frame zone. Wait for it to fail. After it has failed, you don't need any more confirmations for the trade. You can look for some other ones, but for me, after having seen this demand zone failing, I know this is my golden confirmation for particular trades. So after seeing this, what will I do? I will go on the flip zone, which in this case is a supply zone right here, and I will enter aggressively from this SL here, entry here, and TPs wherever they are. So this is the 5-step process for entering from flip zones, and this is, in my opinion, such an easy way to improve your trading because it's an easy lower time frame confirmation, no complications with change of character and all of this stuff. If you can identify supply and demand, then you can use this lower time frame confirmation. What we're going to do now is we're going to move on to the real life chart example. We're going to move on to Euro USD, and I'm going to explain how you could have benefited from my trade setup or signal, how you could benefit from it from entering on that lower time frame confirmation. So I'll see you guys in just a sec. Okay everyone, here I am on the 1 hour time frame, and this is on Euro USD. And what we're going to start off with is actually just quickly identifying the higher time frame POI and what I was thinking about before I moved on to the lower time frame and we started that 5-step process when it comes to taking this trade. Let me just quickly replay this as well. Okay, so first things first, why exactly did I pick this higher time frame POI? I saw this 1 hour demand zone. It's a valid area of demand. We can see that there was a previous break of structure over here. Break of structure. We can see that break of structure right there. And what also grabbed my eye was this significant level of liquidity being swept. We can see a triple bottom here, all being swept out by this one level of demand. And I can tell that price probably tapped into some sort of demand zone over here, and there was just a sense of bullish order flow being created. We tapped into this fair value gap, and yeah, we saw an upward movement, and then price mitigated something here, swept this liquidity, and then we moved up, created a breaker structure. So I was feeling very happy with this higher time frame POI. However, I did not want to enter aggressively because price on Euro USD was kind of overbought. We had just swept over a significant area of liquidity, so I was thinking maybe price will tap into a supply zone and reverse. So I just wanted to see a confirmation from this zone. So what did I do? I went on to the 10-minute. Actually, wait, just another thing was there was a lot of liquidity resting over here as well, which also grabbed my eye. And I think that was everything that I was really looking for. Yeah, so that was all. And yeah, my TPs could have been somewhere here, or maybe at this supply zone here, or this high here. So that's just some possible TPs. But yeah, now what I did was I went on to, for example, the 5-minute time frame, and I waited for price to actually tap into the zone. Oops, played a bit too much there. Okay, so first things first is that we sweep through this level of liquidity and price immediately picks up in momentum, which is something that I like to see. And we also had this level of inducement over here, which I haven't mentioned in a while on the channel actually. Maybe I'll make a whole video on inducement. Please let me know in the comment section if you guys would like a whole video on inducement alone. I can go over that as well. But yeah, price also took out this level of inducement. And yeah, I was feeling very confident with this setup. So what was next was just to find my confirmation. So yeah, here I am on the 5-minute time frame. Price has now tapped into our higher time frame POI. What do we do now is we mark up our supply zone right here, which is the supply zone that I'm looking for price to fail. Because if we remember the steps, right, if I just put them here, wait for price to tap in, I'll just simplify it, tap in. Step 2, mark up SND to be failed, right? The SND that we need to see fail is this supply zone. Why this supply zone? Because if price respects this supply zone, then we can just expect price to continue to go down. But if price violates this supply zone, then we can accept the market to flip. And what will we do? We will enter from our flip zone. Oops. But yeah, now let's wait for price to violate this zone. Boom. Right there, we can see price takes out this level of supply. Right, so let's just put that in step number 3. Take out level of S&D, markup flip, which caused. Okay, so price has now taken out this level of supply, telling us that we have now failed supply. And now what do we know? We know that if price is failing supply, then demand is going to take over. So what do? We mark up the demand zone, which caused this break of previous structure, which is this supply zone over here. This level of structure was broken by this demand zone. So this now becomes our flip demand zone. Put this at the bottom. And what can I do from this? Which is step number 5, this simple step, which is just to enter. Right? This is as simple as it gets, guys. Put our entry there. Put our stops at this low. You might want to give yourself a bit of breathing room, you know, just in case price might want to mitigate slightly deeper on this zone. But yeah, that is literally all you need for this confirmation. I'll now delete this very quickly. And targets, remember I said we can target the equal highs that are over here. We can target this fair value gap that is over here. We can target all the way up here for that 1 to 15. I made that stop loss tighter. We'll get that 1 to 15. Realistically, it doesn't matter what your TP was, because at the end of the day, it's all about the process of how you got this trade, right? So we can play this out now. Price types this in. And then let me just up the time frame a bit. Boom, there you go. Price goes way past our TP. And yeah, happy days, successful trade. So let's just do a quick recap. We identified this 1 hour POI because it had a liquidity sweep. It was a valid level of demand that is yet to be mitigated. It had a level of inducement and it had a break of structure. A very valid higher time frame POI. I waited on the 5 minute for price to tap into my zone, and after it tapped into my zone, I tried to look for a supply zone that I thought was going to be failed. After I saw the failure of the supply zone, I knew that market was going to flip, and it was going to flip from this demand zone. So what did I do? I marked up this demand zone. I identified it as the flip zone. I set my entry here. I set my stop loss just below the low, and I set my TPs at significant areas that I had already marked up on the 1 hour time frame. This is a perfect case study to show you guys how you can combine the higher time frame with the lower time frame to get a really good trade. But yeah, that's all from me for today's video. Thank you all very much for watching. If you did enjoy, make sure to leave a like and leave a comment. If you do want to understand more about this kind of trading, and if you want to get mentored by me, make sure to either send me a DM or enroll in the mentorship. But yeah, thank you all very much for watching, and I will see you in the next one.